Good morning, everybody. Uh, I'll quickly introduce myself with the company and some of the stuffs that we are doing, and then I'll be happy to answer any questions. Thank you. So I have with me Sailesh, who's the Director for Technology Operations and Planning. He'll also be answering some of the questions. Okay, so not take much time. I'll directly dive into this. We started Jarvis back in December 2016. So soon we'll complete 7 years now, the next month. What we have been doing is we have been using big data and artificial intelligence on the capital markets, equity markets, and have been creating a lot of analytics and market intelligence. Now, it sounds pretty easy, but we have actually spent about 7 years of inception of company and 2 years before that, almost 9 years developing this. When we started off, the original thought was that, you have expert fund managers for PMS, AIF, with PIF, PMS, AIF products like that. And only the HNI category customers are able to enjoy those services. So what about the retail? Somebody wants to invest a lakh, somebody who wants to invest 25,000 rupees. What about them? So the initial thought was, can we build a tech which can have a PMS kind of a product for mass audience? And that's what we created back in 2019. We launched our mobile app and we had exactly this product, with slight difference, which was the hyper personalization part. So for our customers, even today on our app, if you go and try out the portfolio product, we ask multiple questions from a personalization point of view, and every portfolio that is being created on our platform is unique. And that's not it. There is also a risk management system that we have developed over the years. Again, the entire risk management cycle over the entire, investment life cycle is completely unique to every customer. So if there are 100 customers, 1,000 customers, 10,000 customers, all different portfolios. And on a given particular day, I might give a buy to a client and a sell of the same stock to another client. So sounds very different, but yes, that's how we have been managing it. And our performance has been quite good in that particular product. Now, eventually, we realized mid-21, I would say, that while we are creating all of these analytics for our portfolio product, we actually were manufacturing goldmine information when it comes to market intelligence and analytics, which we were just making use for ourselves. That's it. That's where we decided to, make everything from an institutional standpoint, democratize everything, make it for the world and not just for yourself. And that's the entire effort that we started putting onto that. So today, if you look at it, we can say 40 million data points per day. So actually, we look at nearly 300 data points. This is from an Indian standpoint. We do some of the foreign markets also now. So we look at roughly about 300 million data points that we process almost every single day, using roughly about 33 different neural network models. These analytics actually help us create a lot of market intelligence and research, which can be in certain format plugged and played with various financial institutions across the spectrum. Okay. Let me speak a bit on the technology part. So now asset management, fund management, research has always been there. That is not something new as a subject. But if you look the last 12 to 15 years, a lot of things have changed, especially from the availability of data. And with the advent of technology, I believe a lot more can happen. Now, just talking about India, about 10 years back, we were heavily dependent on FII investments and everything around. But today, the scenarios have fairly changed. Even the domestic investors or the retail investors also hold a lot of stake in the ecosystem. Now, the dynamics that a retail investor would behave or a domestic investor would behave versus an FII is completely different. How are we accommodating to these things? Now, a lot of data today is available. Like, for example, about 15-20 years back, something happens in maybe the US is a big name, but say one of the foreign countries might not have an impact on our markets. But today it's not the case. So, forget US, but even in the smallest of the countries, something happens, then some impact comes to our market also. So that's the impact of global data that's happening in each of the markets. It's not only India, but almost all the developed and developing markets across the globe. So what we do is that we consume, as I mentioned, 300 million data points. Now these data points are divided into these 8 buckets. So for example, if we look at the fundamentals, so today we process the data for India, US, Australia and KSA, Saudi Arabia. So between these 4 markets, we process roughly about 15,000 stocks and ETFs. Now we look at the fundamentals of almost all the quarters for the last 10 years. So that's a huge dump of data that gets processed within the machine. Beyond that, we also look at price and volume time series data for the last 17 years, 16 to 17 years. So certain market is 16, certain market is 17. Now again, this is being used for creating a lot of predictive analytics and everything around. Now between corporate actions, any changes in government policies, changes in regulations, compliance, any news, events, interviews across the globe that's happening, the machine has the capability of consuming all of this information pretty much real time. So we have got a lot of API integrations done with a lot of parties across the world. Plus we also scrape a lot of sources, and we have created multiple sentiment engines. So something that would be able to segregate what are the macro factors that might impact a stock or a sector, what are the company specific factors that might impact the performance of the stock, as well as what people think. So people sentiment. Now over the last 7 years, we have also gone up the learning curve. We have committed a lot of mistakes. So the earlier thought on sentiment analysis, especially on the people sentiment side, was more the data, better is the accuracy. Over the years, we realized that no, a lot of it is noise. So today we have also moved to better quality data. We know what to take, what not to take, and everything around. We are always data hungry from that perspective, but now we also understand that what to take, what not to take. So between all of these data sets, you can see a neural network model. So all of these passes through, as I said, 33 different neural network models. Now fundamentals would have their own separate models. For the technicals, we would have a different model. Each of the models have the capability of doing an internal back testing of every model. So be it fundamental, within fundamental there are 9 models. Each one have the capability of doing a back testing and predictive analytics and a lot of stuffs. Now between all of these things, we get the middle layer, which is right from fundamentals to predictive analytics. That is the analytics and the market intelligence layer that we have today, and you can say that's the IP that we possess. Now between, say for example, fundamental, the way we look at data is completely different. So how an analyst would look at the data would be looking at the balance sheets, the quarterly annual results, looking at the progress that the company has done, the sales growth, EPS, and many other things. And we know a typical research report, how it looks and all. We ride on data. So and pretty much on a real-time basis. So it's not just the fundamental piece that's impacting a particular stock, but for us, a lot of sentiment also impacts. A lot of technical data or the price volume data also impacts. Now, just on the price and volume time series data, we have this information right from 2006, 2007 in certain countries. Now, over so many years, for all the stocks, we know that which all events have happened, macro events as well as micro events has happened from an Indian perspective, and how every stock or every sector has behaved. And there is also a pattern that's being formed at the back, which we see, which we understand, and which we constantly try and improve the efficiency of those things. So basically, that's the middle layer of market intelligence. And so when we speak to a financial institution today, they are not interested in the buy, sell, hold verdict. They are interested in what kind of intelligence can we add to the ecosystem. So that's where the middle layer comes into picture. But in India, we are also retail. We started retail long back. So that's a piece that's still running. We have 3 products on our mobile app, and that's running. It's a BAU for us. So, but then that's where there is the end customer, and that end customer wants a buy hold recommendation. They are not interested in the analytics and research. So that's where we process this information through some more neural networks, and we create Jarvis verdict. Now these Jarvis verdicts are basically final decisions post considering all the analytics and intelligence that we create. And this entire system has been running over reinforcement learning for the last more than 4 years now. So, the system has been learning through the market dynamics, changing market dynamics every single day. We don't even look at the markets, and it kind of manages itself, from a forward-looking standpoint. Now, I'll also talk about some of the solutions that we have been doing. Okay, so as I just mentioned that as an organization, we are one retail, second is the institution. Institution for us now is becoming slowly and gradually an elephant in front of the retail, wherein again within the institution there are two portions of it. One would be wherein we approach a financial institution and they say that, hey, can you create a product for me, end product for me, or can you create a solution for me? And the second would be the research institutions, wherein we can create a lot of backtesting engines. We can do a deep diving in terms of research. We do a research digitizations also. So some of the say if somebody has a 30-member, 25-member research team between analysts, fund managers, IC team, and everything. Now they have been doing something. So they have been pulling data from various sources, putting in an Excel sheet, building models, putting their assumptions. Now these assumptions are based on experiences and estimates, and then eventually refining the model, eventually creating a nice financial model to do a estimate and forecasting. Now we digitize all of these things. So and this is practically a customized thing between one institution to another institution, because everybody would have their own secret sauces. So we digitize all of these things. So as an analyst, what you are able to do in a month, you are practically able to do in 5 minutes. So all of a sudden, your I would say the horizon of number of stocks, horizon of the risk parameters or the opportunity parameters increases all of a sudden. So instead of doing 250, 300, 350 stocks across just NSE, you're practically looking at the entire NSE. And in fact, for some of the players who are also international, we also provide the US and whichever country is required. So I'll skip a couple of these things. I'll deep down on some of the solutions. So when we speak to a broker, now brokers typically have got problems in terms of their dormant customers. So almost approximately 30 to 35% customers would be dead, dormant, not doing anything. Another 25 to 30% customers would be the ones who are holding something but not transacting. So this put together is about 60 to 65% of the customer segment that any broker today has, even the small or the big, irrespective of that. And we work with the broker. We work with the brokers wherein we provide analytics to all of their customers. So for example, if I talk about one of the topmost broker in the country today has more than 1 million active customers who are holding portfolios but not transacting. So as a broker, you're not making any money out of them. What we do is that we pick up this, so randomly assume that these 1 billion customers are holding at least 30 stocks. So we are talking about 300 million unique stocks. We pick up this information from the database of the broker, process it overnight within our system, create analytics for those 1 billion customers, place it back to the system in the morning. The broker picks those analytics and disseminates it within their customers. And these are typically the sell calls. Because, if I am holding at least 50 stocks in my portfolio, maybe spread between 2-3 brokers, I don't have the time to look at all 40-50 stocks every single day. And all of a sudden, I might even not know that one of it is getting delisted or something is happening because of which it will probably correct. That's where we come into picture, and for the larger audience, we are able to provide these sort of insights on a everyday basis. So that eventually will invoke the habit of doing transactions. And again, this is completely white label from the broker standpoint. So it's not Jarvis who's recommending, it's the broker who's recommending. So also that adds as a USP for the broker. It's a value-added service that the broker provides at no additional cost. So that's one of the pieces that we're doing actively with brokers, apart from doing a lot of white label products. So more than 10 brokers in India today are selling our white label products on their platform, especially the ones, barring the top 8, 9, 10 brokers. Most of the other brokers would not have a really large research team. Some of them don't even have a research team, so they don't have a product as such. So that's where they directly sell our white label products to their customers, and even my team supports the entire marketing and every aspect around it. So that's what we do it for the brokers. When we come to the research piece, which is the AMC's, treasury, research, insurance. Within insurance is the ULIP piece, actually. This is where we provide a lot of market intelligence. We can create multiple engines that would cater to the existing research that the institution is doing. So eventually making the decision making much faster. I would say the availability of data from a risk management standpoint very clear and prominent. As well as as I mentioned, that we have our own risk management system that we have been using for the last 4-5 years now. So again, that is something that time and again has saved our retail customers, on bad days, including COVID. And many other times, in fact. So this is something that also we can provide as a plugin to the asset managers or fund managers on them. And again, all of these solutions can be accessed in multiple ways. So one of the things is, we have APIs for practically everything. So those things can be plugged and played. Second is we have a terminal, like we all know. I mean, generally you have a Bloomberg terminal, LSEG terminal, and everything. So we also have a research terminal. Now on that, we as an analyst or a fund manager, you can practically conduct any sort of research. So you actually don't need APIs for that. And we are adding more digital properties to that almost every single quarter. And last is where we do a complete customization. So we understand what you do. My analyst team understands what you do, and we try to optimize those things, digitize those things, eventually saving a lot of time, improving efficiency and everything around it. And last bucket is the wealth techs. Now, wealth techs are basically where we are talking to banks, neobanks, wealth managers, robo-advisors, wherein we directly do a deep integrated product with them, wherein these products can be customized. So it's not that, okay, I have got 3 retail products with me, I have got the research solutions with me, but as a wealth tech, if you are looking for a customized solution, so that's where we come into picture. So any sort of product, so anything on the capital markets, equity markets under the sun is a possibility with us. So we process so much of information and analytics that we can practically create any product solutions for this particular community. So I think that's where I would like to pause here and would like to ask in case you have any questions. Yeah, absolutely. Shailesh, if you want to join me.
So maybe I can kick off.
Yeah.
Thank you very much for the presentation. So on the institutional side, when you're working with the research people, so any kind of research house would have a 12-month view. So is yours shorter term views, longer term views? How does that all kind of, because what you're saying, it seems a little bit more like you can buy and sell a lot quicker. Maybe I'm wrong in my understanding.
So we can practically do both. The solutions that we can create can be for a positional trader as well as from a long-term investor. So if you look at the portfolio product that we have, the minimum tenure on the retail side is 1 year, 1 to 5 years and beyond. So we have a longer view also. We can create a long, short, however it is.
So is my understanding correct that your unique capabilities to handle millions of individual accounts and process them individually for individual goals?
Yes.
That's the unique proposition. My question is, why did you feel the necessity to do a lot of what looks like environmental data capture? I'm trying to understand why you wanted to do it, because usually those who operate in the capital markets take it as people who are investing or divesting or trading are acting upon that information already. So as they say, it's in the price. Whereas government policy, war, whatever it is, it's already in the action that's happening in the marketplace. And therefore, most people choose to actually track the behavior in the marketplace rather than all the environmental data. What is different that you are bringing by capturing that? What's the difference that it makes?
Okay. So the difference would be in two parts. One would be the retail who we are catering to. Second would be the research and institutions part. Now, on the retail side, these investors are not much updated. They're not tracking much. So they need that handholding. So for them, we started capturing this information and processing to start with. Second is that also gives us the first mover advantage for doing anything. Like for example, in even just in COVID, none of our customers actually got stuck. I would not say lost money because eventually everything recovered, but not even a notional loss because we were able to exit everything by 6th of March and entered back on 26th of March. So that's the key benefit that we have of having this system live. Moreover, from the research standpoint, as I said, that it gives us the first mover advantage overall, and at least whether as an institution you want to act on it or not is absolutely up to your choice. But from a the analytics provider standpoint, we at least create those analytics and we give we keep you informed in terms of what's happening and how the things might or might not change. The decision making while completely remains at the institution's hand.
No, sorry. My question is the predictive analysis that you do, instead of taking those multiple environmental factors, if you just took the market behaviors and built a predictive model, wouldn't that be more accurate? Because there will be a leakage of behavior between environmental capture, then the market behavior, and then the prediction.
Right. So we do that too. So we consume those information. So we process those things also. But at the same time, these are all additional attributes that can make the model even better. Independently. And whereas if you look at today, I'll just go back here. Yeah, if you look at it here, so every single data point is practically linked to each other. So that actually helps.
My point is, there's nothing additional there. Anybody who's operating in the market knows that stuff in some form.
Yep.
Right? Whatever his or her understanding. There is nothing unique in that left stack.
Absolutely.
Which people don't know. And they were already operating in the market. So why not just track the behavior of those operating in the market rather than all this information? Because you will never be complete in this. Nobody can be. Right? So if you're anywhere going to operate in a semi-complete format, why not just go where the action is happening and why do all this?
So we do consume those things also. As I was just mentioning, we consume those things, but these are some additional inputs that the system takes, which it might just give you one insight in a particular year that might be important.
So, I think what you guys have built is very unique and I think it'll create a good solution for a lot of people, including, let's say, individuals or institutions. Couple of questions in my mind. Obviously, when you're working with data, right, and you're obviously only looking at historical data to kind of give recommendations for the future. And one of the challenges that usually happens with data and giving a recommendation for the future is curve fitting, right? So how do you kind of overcome that challenge? One is curve fitting, because, with historical data, you do have the tendency to just fit whatever you want to kind of see and give a recommendation. So that's one. And two is considering the fact that your solution is not like one solution which fits all, and it's more like a customized solution, right? So across multiple investors, it's multiple solutions. Let's say even for institutions, it's multiple solutions. How do you benchmark your performance? How do you judge yourself how is the recommendation that you're giving? How is that doing better or worse off? Let's say one is versus the benchmark that the institution or the investor might have, or two versus what else they could have done, right? Or versus the peers. So on those two things, what would you say?
So I think I'll answer the second question first. In our system, the profiles of each investors are segregated into multiple profiles, like moderately aggressive. So that's how we currently track our performance. So our performance for each of the profiles, from aggressive to conservative, we are more than 85% accurate. And from a benchmark perspective, we are above the benchmark over 10%. And from a CAGR perspective, we are giving returns close to 35% on an annual basis. That's what we are doing.
Now, Again, that's purely from the retail. That's answering the retail part. But from a product standpoint, so the internal product team, we look at our own accuracies in multiple parts. One would be we look at our directional accuracy. So obviously, the end goal is to predict. So when we predict, it would either be an upside predict or a downside predict. That's where we look at our directional accuracies. And today, as we speak, we are anything upwards of 78% on that particular part. Second is we look at achievement accuracy. Now, achievement accuracy is something that's not published. That's an internal thing. We say that whatever we say, so whenever we say a buy for a particular stock or a sell on a particular stock, it has to appreciate by at least 3% a month. So then I would give a mark to me, otherwise I will not. So it's a reward and a penalty. So it's a part of reinforcement learning. So it's a reward and a penalty mechanism. So I'll give myself a reward. And even on that part, we fairly do about 85% on the achievement accuracy. Now, again, these are the final level accuracies that we maintain. When we do that, all other parameters are being maintained. So, be it the fundamental output or the technical output or any other things, everything is being managed within those things. Third is, even if you look at the third retail product that we have, it's a product called One Stock. Now we have another format of the product called Analytics portal that we generally give it to the HNI customers. It's a portal that's being sold. Now even on that, so on the retail side, we publish one high conviction stock a week, and on the portal every day, whatever number of high conviction stocks we generate, we publish them. Even on that platform, we have a 3% internal benchmarking of performance. Now, from an external benchmark standpoint, we would look at an NSE 500 because we are market cap agnostic. So it's not specific to a market cap. So NSE 500 is where we look at. Now, answering the first question, if we can repeat that, what was it?
So usually with historical data, you do tend to kind of curve fit, like
yes,
fit what you want,
right,
and then give recommendations.
Right, absolutely, I get it. So see, as I was mentioning that we have actually moved on the learning curve by a lot in so many years. When we started off, when this machine was during the supervised learning phase, yes, this was something that we observed. In the unsupervised phase, the machine started looking at a lot of data which we were not feeding the system, and it was behaving in a certain manner. When we actually achieved our accuracies, so in various parameter accuracies, during that phase, we eventually put the machine into reinforcement learning. So today, if you look at it, while we look at the historical data, there are a lot of factors which are being consumed on a real time. Like, I mean, anything and everything beyond fundamentals and price, everything is real time. So a monetary policy comes, my system knows about it and it knows the impacts of it. So now we don't have that issue of overfitting the curve and everything around, because we have also started looking at a forward looking market. Now we are also trying to do a forward price estimate. So we currently have a price estimate about 7-15 days. We do a predictive analytics. We are trying to build something which would even predict for 1-2 years now. So maybe in the next 6 months or so, we will be ready with that model. So that would suffice both the requirements around.
So did I get here right? You said 30%?
Yeah, 35%.
35%. And for how many years have you been doing this?
The returns? Yeah, that's been the CAGR roughly.
For how many years? Now?
2019 till date.
So,
September 19 till date rather.
So why are you selling this to anybody else?
That's a classic question I keep on hearing a lot of places.
I don't get it. I mean, I know Renaissance Technologies stopped doing it, right? They just gave money back and managed their own money. Why would you give away something that's making money out of thin air? Sincere question. Why not?
Yeah, absolutely. See, the vision that we carry is not fund management, to be honest. The vision that we carry is to power fund management companies across the globe and not just limited to India. Now, some of the stuffs that we are creating today, if you look at a 7-year, 10-year kind of a goal, we want to become the AWS of the fund management, wealth management industry, that you have plug and play solutions for practically everything. Now, a similar model, I would say, I'm sure all of you would be knowing Aladdin, that's BlackRock's own product. So we look at them And though that's an internal product of BlackRock managing $9 trillion of BlackRock itself. We want to become an agnostic when it comes to providing technology around. So we want to create solutions which can be used not only by the fund managers but a broker to a to an investor across the globe anywhere. So that's the objective. So we do not want to restrict ourselves with one exchange managing money, some $1 million, some $1 billion for a particular region, and restrict ourselves, because then we become one of the global players. Whereas from a technology standpoint, we have the global capabilities of doing research across the globe. That's what we want to do. So today we have the research for about four countries. Next year December we want to reach this number till 10, and that's how we want to do a deeper integration in each of the geographies then within the EAs and everything around. So that's the reason we are holding back from that part. Again, the retail we are continuing because we had retail, and that's a money making piece for us, so we are continuing with that. We are doing some pilot works with some of the funds globally. We are doing piloting with them wherein the AI is directly managing the funds. So maybe we look at going live first quarter in the next year.
So are you seeking investments in your company?
Yes. So we did 2 rounds before this. And now also we are trying to raise about $5 million, primarily for development and business development, both tech and business development, both. Any other questions?
Would you say that your solution kind of removes the need for research analysts for a fund manager?
No, that would augment it, because you would still require that one human element in the overall picture. While we have been running our retail, we managed roughly about $20-25 million on the retail money. So these are 50,000, 1 lakh put together about that money. That's an automated piece for us. But tomorrow when we go and manage $100 million or something like that, then that's where you would require a human. Moreover, since now we are working with a lot of these companies, we realize that everybody would have their own way of looking data, their own secret sauce basically. So that is something that cannot be replaced. So that will be there while we can help with the overall technology. So the end objective is to save on the time and build more efficiencies around it.
So do you run into this challenge with institutional managers that most of them are active managers, right? And why would they want a machine view of what they do? I mean, active managers pride themselves for stock picking and all these things that you are putting into the machine, right? This is their brain CPU doing all this work, and each one has a style and whatever manner in which he or she invests, and that's what is the secret sauce, like you said.
Absolutely.
Do you face resistance in them even wanting to try this?
Yes, we do.
So in which case, would it go anywhere as a product?
Yeah, it's going, but because we are not competing with them, we are augmenting the overall capabilities. So I mean, one small thing would be, if you look at the universe now, even the biggest institution in the country today is not doing research beyond 350 stocks. Now again, that can be a choice, but then if I look at my retail model, we have been picking up the 1,000 stock or the 1,500 stock, and that has turned out to be a gem. Now that's an opportunity. Now not every fund is running a 1,000 crore fund. There are even smaller funds. I mean, even there are new funds which are coming up, which are initially be smaller. So you can actually go into these market caps, pick up those things, and generate returns. Now these are certain things which otherwise the institution will not do. He'll not doing it. They're not doing this piece. So that is a value add that we are doing. Moreover, when I said that we are doing a lot of digitalization of the research logics, and that actually saves time. So if you actually look at it from the analyst or the IC committee's point of view, the work that my 10-member team was doing in a month, if they are able to do it in say a week, then I have the 3 weeks left for doing a lot of other stuffs. So again, what are those other stuffs can also be powered by us.
So, I mean, final question for me, but I don't know if you've done this exercise, but if you just took out your large cap recommendations, what's been the performance?
I would not have the numbers ready with me right now, but we do have the analytics at the back end.
And second is, in terms of competition, there must be, not just in India, but globally, lots of people trying to do this.
On the retail piece, yes, we do have some competition here, but on the institution piece, we do not enjoy much competition around because there are not many players who are working on creating the market intelligence, providing analytics, have the product capabilities, have the solutioning capabilities with any sort of customizations around. So in India, we do not have anybody, at least not I have come across through till now. Globally also, there are just 3-4 players. Like one, as I said, would be Aladdin. AlphaSense is one more. AlphaSense, but then they take pride in doing sentiment analysis, and I would say that they are at a very, very different level of sentiment analysis than what we do today. But some of the other models that we do, they don't have it. So even from as a company, we are trying to be practically the Aladdin for everybody. So, and we do not have many players around it. So people are there. There are companies who are doing something in silos. So there's a company in Israel who's doing something. I know first is doing something around it. So there is one company in UK is doing something around it. But nobody is doing everything at the same time and the product capability with the product capabilities.
Audience, any questions?
Yeah. So,
1 second.
what volume of the data you are handling per day or per user?
Data point of view?
Data volume, GB, terabyte.
That I think, if he knows.
I think that is something that goes on increasing. We may not have
Average, I mean, as of today, can you tell us?
it's into terabytes definitely, but we don't have the exact.
Okay. And what infrastructure and technology you are using for this?
Use the mic.
So basically, we are hosted on Amazon.
Okay.
That's the
AWS.
infrastructure that we are using currently.
Okay. And how much concurrent user or total user you have?
So from the retail perspective, we have more than 10,000 users. And from the institution perspective, we have, so there are different infrastructures within AWS that we use for each institution because of the data, etc. So there are about 25 institutions that we cater to.
Okay. And I understand source of data, you said that is scrapping, API, what else?
LSEG.
So Refinitiv is what we are using for our data source
Okay.
primarily, yeah.
Okay. And any specific technology in the AWS you are using?
So the entire model is built on Python and different models around that. That is what we are using, and on AWS we're using RDS, etc.
For,
Different services for RDS.
Relational database. And data lake?
So that's a service within AWS that the tech team would know.
Okay, thank you.
Hi, Sumit.
Hi.
Yeah. So my question is like most of the the analysis which is coming, it is coming from data and how your team or the programs are there which has been interpreted, right? So can you give me a little background about the team size, who are the people, and how the work is done in the background from that perspective? And my second question, I'll just put it forward. The ones which you mentioned, there is regulations and compliances also which you are taking care, before giving the verdict. So the regulation compliances, is it like industry specific? Like we have different regulations which are there for AIF, they are different for mutual funds, and then there are different, view regarding the valuations and everything. So that kind of data is also being projected when the output is given. So these are the two things from my end.
Thank you. So if you look at the thought process for creating this product, obviously we started somewhere 7 years back, wherein we were trying to do a price prediction of the stocks. But eventually we started consuming more data. and the models kept on growing. We eventually, took a lot of analysts from the industry who kept on feeding, their experiences within the system. And see, everything, whatever we do today is backed by backtesting. Anything, even the smallest thing is done backed by backtesting. And then we also do our live market testing. So we do not publish anything unless and until we are at least in the market internally for 5 to 6 months live. So and now it's been 7 years, so we have done this cycle multiple times over and over today. Now today, if you ask me, that there is no particular model that we follow, because the system has evolved. I'm not saying that we have done it. The system has evolved as it kept on learning during the reinforcement learning phase. So today, if you look at it, there is no particular pattern in which it does research. So that's the reason it is very easy for us to customize for user to user. Answering the second question, which is the regulations compliance. So the regulations compliance that I was talking about are the company, the ones that would impact the company. So the TRAI regulations, the RBI regulations, the SEBI regulations, not for us, but the companies and everything around it. Those side of regulations.
Okay, so but the user will have the option, like for example, as an asset manager, when we are using the software, okay, so we want valuation for this particular security using a particular methodology which is recommended by the SEBI. Okay, so we have to ensure that we are using that methodology. So
Those can be populated.
can be done.
Those things can be done in. Yep.
So from an institution perspective, we have created a dashboard where an institution can go and apply these kind of filters that they want. Any combinations that they want, they can do that.
Okay. And coming back to the first question which Sumit has answered. So I understand the system and the software is being developed, but the team behind it, is it like, the CFAs or financial engineers? It should be like a group of, different people with a different skill set. So that is what I was coming from. So
CFAs and data scientists.
Oh,
So we require more data scientists than analysts.
got it. Thank you.
Hi Sumit, the question is, if you are giving the solution to the institution, is it hosted with their data in your platform, your setup, or is it at the institution setup, or both are applicable? And in both the cases, how is the data security or the privacy has been taken care while the engagement is there, and when the post engagement, when it gets terminated in the mutual manner?
So from the institution perspective, we host an environment on their infra. So if they are hosted on a particular cloud, we deploy the application on their cloud for them. And if not, then we create one and keep it separate from that perspective. So the data doesn't come to us. We have a data privacy agreement with them that who accesses the data, that entire channel is there.
Data points of those, what we were referring to, the source. So do you
Yes.
capture those, and also that has been kept with in your analytics for
Yes, so
harvesting?
while we are creating a dashboard for institution, there are R parameters which show up under different segments, and then the custom parameters of that particular institution also can be added, which we are doing right now for institutions.
Yeah, but historically you will also see what the recipe was been used. That's what my question is. Will you be able to see those recipes?
So that's one, yes, our core team will be able to see. That's how we digitize that for them. But part of it is already being developed by us. That's what they see first. So our terminal has each and everything. There are few customization that they've been doing. So all the institutions that we go to have a common thing that they apply at. There are few tweaks that they do here and there. That's something that can be added. But we have the data for that.
Okay.
Whether we have backtested your model, so performance may come 1 or 2 stocks sometimes, but whether we have backtested the events, which what you have recommended versus what was actually is done.
Yeah, so that's what the backtesting engine does from a price perspective
So
of
not
each
about
stock.
price. I'm not talking about price. I'm talking about the events.
Yeah, so events would eventually
macro as well as micro, both sides. So like whether you have predicted well in time before, like Russia-Ukraine war, and recently the Israelis, the current which is going on. Not only this is one of the example which I have given. In addition to, is there any event which we have already predicted before that, and your back testing of the data, or you have predicted well in time? What are more questions I have?
Yes, we do that. So
Any example which you can share?
yes. While I was saying that we have got a reward and a penalty mechanism that works even on the events data, and how we take an action on a particular event. So one of the examples would be last year, January 17th. On the retail side, we exited almost 85% of our portfolios, moved to cash. And my support team was flooded with, why are you asking to sell everything? And honestly, we were also clueless, why are we asking to sell everything? So, but next 3 days, 18th, 19th and 20th of January, Nifty tanked by 6.7%. We were small and mid heavy at that point of that, tanked by more than 10%. So that was a savior, and at that point of time, we actually got a lot of reviews on our Play Store, App Store, saying that, okay, I mean, that's a fantastic move that has happened just one day before, but we were also not knowing about it. So this is one of the examples. Now, this is just I would say that event stayed for about 20 days before we re-entered the market. But similar things kept on happening again and again. Even in the current scenario, if you look at it, the the Israel-Hamas thing happened. We exited small caps completely. The system did it. When I say we, it's always the system. So we exited small caps. The first thing that we do, we moved towards large mostly, but we still have some of the mid cap exposures also. So today, as we speak, I don't think so there is any small cap holdings that we are having in the portfolio. So we have certain indicators that we apply on the benchmarks also. So be it Nifty or every other thing. So we fairly, I would not say 100% accurate, but we fairly understand the direction where the Nifty is going to go. So we have something called as a market exit, market entry kind of indicators at the back end. These are not something that you can see on a terminal or something, and that's an internal consumption that we have. Thank you so much.